Good evening, future Maryland home buyers. Thank you so much for being here. My name is Jackie Muick. I'm the Consumer Advocacy and Website Manager for Maryland Realtors. I want to welcome you to the Your Home Buying Keys webinar for April. Assembled tonight, we have experts in the industry, and they're going to give us all of their wonderful information and answer all of our questions. With us, we have Queen Peterson, a realtor with Royal Real Estate, Kelly Williams, a lender with Geneva Financial, and we have Catherine Kamerdale and Frank Bunmonday from Maryland Department of Housing and Community Development. They are from the Maryland Mortgage Program. We're so excited to be able to go over that information with you all. And tonight, again, you are going to get an abundance of information to help you navigate and succeed in your home buying journey. This webinar will be recorded. Please feel free to take notes, but know that you will be able to come back to this presentation. I will be sending everyone a YouTube link after the fact sometime in the next week. And we encourage your questions, and we're looking forward to getting them answered. Please post all of your questions in the Q&A box at the bottom of your Zoom screen, and we will answer them as Q&A sections come up. And with that, I'm going to turn it over to Queen.
Hello, everyone. Okay, my name is Queen Peterson, and I am so happy to be here to welcome you to our home buying journey and seminar. My goal is simple, is to help you move from thinking about buying a home to actually holding the keys in your hand with confidence. Next. I'm Queen Peterson. I'm the broker and owner of Royal Real Estate. I do have over 25 years of experience, and I have helped hundreds of home buyers become buy homeowners, from buyers to homeowners, and making them very, very happy people. Now, this is the home buying steps. It's not that hard. It's not that difficult. A lot of people think, oh my goodness, there's a lot to it. But when you have a realtor, someone like me out there, or an experienced agent, we can hold your hands and help you from A to Z, get through the process and help you become home buyers. So there, first of all, choosing your realtor, someone like me, I'd be more than happy to help you out. The next thing you want to do is try to get pre-approved, and then you're going to find a house, which is the fun part, and we're going to make an offer. And you need someone like me that can negotiate that contract. So we are going to get the most house for the least amount of money. And the final steps is actually closing day. Next, choosing the right realtor. So it is very important that the agent that you choose, the realtor that you choose, they have fiduciary responsibilities to you, meaning legally and ethically committed to putting my best interest, your best interest first, and maintaining honesty and protecting your information. And today there are a lot of new laws that are out there, and one of them is concerning the payment for the realtors. It used to be that the sellers paid the commission for the selling agent or the buy broker agent, and now the buyers actually are responsible for paying the realtors. But if you get someone like me, we can go over that. Don't panic over that, because in many of the deals, we have found out that, or we can set it up so that the seller is going to pay the commission for the selling agent or buy broker agent, but you have to have a realtor that knows how to negotiate that and put all that into contract for you. And someone like me can help you. So the next. So the next thing that you would like to do is you want to understand your buying power. How much house can you buy? It's just almost like going out and buying a car. You sit in the office and then at the car dealership, and then you look and you say, well, am I going to buy a Volkswagen, or am I going to buy a big SUV, or am I going to buy something in between? So because the dealers are not going to take you out to to the lot and help you buy a Maserati if you didn't get pre-approved for a Maserati. I mean, you might can, but most of us can't. But anyway, um, you need to find out what kind of budget you are working with for your house. At least know what that top number is, so that you don't start looking for houses that are out of range for you. And when you understand your budget, then you feel more comfortable at looking at the houses that that are in your range and that are not, you're just not out there just spinning your wheels for houses that may not even will not help you or your family. Next. And the next part that is really, really fun is to actually go out and house hunt. So, house hunting, we already know how much house that we can buy, what we can afford. So, what I would always ask the buyers is to kind of like create a list and put the important things at the top of the list. Like some people may say, oh, I have to be in a certain school district, or I have to be able to commute within 30 minutes from my house to my job, or they may say I have to have 4 bedrooms, or I have to have 3 bedrooms with 2 baths. Whatever it is that is so important to you, put those items at the top of the list. And what I will try to do, I will try to go through the list with you and prioritize everything the way you want to set it up the way you think that it would benefit you and your family. And once you do that, then we can go out and we can start looking at houses. I will send you, before even that, I can send you a list of houses that will fit the categories or fit your list. And then we can go ahead, narrow down those houses, and then we can start looking for them. But while you're looking for them, I need for you to take some notes, and I need for you to ask questions or communicate with me because, it's very, very important that we find the house that will fit you and your family and you're going to be happy concerning it. You may not find the perfect house, but again, we will try to help you find a house that you're happy with and will suit you and your family and your loved ones. Next. You also need a realtor to help you negotiate the contract. Now, once you go out there and you say, "Oh, Queen, this is the house that I really want, and I think this is going to work. This is going to work for my family, and this is the one. This is it." So, what the next step after that would be for me to help negotiate that offer. And in the offer, we're going to be talking about the price, of course, the down payment, inspection terms, the settlement date, and if there's any competitive situations, like we have to do escalation clauses or anything like that, we'll sit down, we'll talk about strategy and what would be the best offer. Because my goal is to make sure that I get the best house for you at the least amount of money that we're for you, and so that you'll be able to afford that home and be able to keep that home for a long time if you decide to do that. Next. Okay, so once we make the offer, okay, we're going to go into negotiations and contracts, and then that's when you're going to accept it, reject it. The seller can accept it, reject it, or send a counter offer. And and the contract terms may go back and forth a little bit. Between the buyer and the seller, or the listing agent and the selling agent, for a while, but then eventually we'll all come to agree to all the terms, and that's what you call a ratified contract. And once the contract is ratified and everyone is happy, the seller is agreeing to everything, the buyer is agreeing to everything, then we're going to notify the loan officer, let him know that, we have a ratified contract. So he knows that now you're moving forward to trying to get approved for your property. And then we're going to notify the title representative so they can go ahead and make sure there's no liens or encumbrances on the property. And then we're going to go ahead and set up for the home inspection so that, excuse me, so that we can go ahead and look through the house with a home inspector to make sure that the house is safe and habitable and that you're going to be okay living there. And if repairs need to be taken care of, we can go back and forth with the seller just to make sure that some of those repairs can be taken care of. And then sometimes if the seller does not take care of those repairs, then what can happen is that they may give you some money to repair money to take care of those repairs. So either way, we're going to work it out so that you're happy with the house and that you're not stuck with a whole bunch of repairs or house with a money pit. Because if for some reason we do pick a house and it's not that great, then we can always go ahead and um, let the seller know, or let the listing agent know, and the seller know that we no longer want to be a part of the contract. And at that point, we'll go ahead and sign releases, and then we would just go out and just try to find another house at that point. But most of the time, I'm good at picking out the houses with you and finding a house that will serve you and your family and be safe and a house that you will love. Okay. Okay. So you're almost there. Um, Once the home inspection is completed and all the repairs are done, then we're going to go ahead and we'll do a final walkthrough. We just want to make sure that everything was taken care of, all the repairs. If the seller decided that they were going to make the repairs, we just want to make sure that they were taken care of. And we want to make sure that the appraised value of the property is there. And we want to make sure that if there's any questions or anything concerning the home, that we get those questions answered first before we go ahead and actually go to closing. And before you go to closing, you're going to have to um, the next slide. Okay, so before you go to closing, you're going to need a couple of two forms of ID. You're going to have to bring certified funds, or the title rep may ask you to wire money in, or they may ask you to or you may get some money back. It depends on if you use some kind of program, and maybe you um, put in you had a program that you ended up and you used all the money. The seller helped you with closing costs, and at the end of the day, you might get a little bit of money back. I've seen it happen before. So, but anyway, you have gone through the home buying process. You're going to go ahead and you're also going to get a closing disclosure statement so you can go ahead and look at your final numbers just to make sure that those numbers are correct, and that if you do need to bring some money to the table, that you know exactly how much money is you have to bring. The title rep will tell you what day you're going to be closing. They're also going to be telling you, answering any other questions that you may have concerning closing. And then once the next day, we'll just all go in, you'll sign your papers, and then you'll go ahead and you'll get your keys. And then I can say, congratulations, you just become a home buyer. And if anyone has any questions, you can let me know.
Thank you so much. Yes, please.
Okay.
So far, I'm not seeing any questions in the chat. Um, but give me one moment and just let me reorganize my things. So, Queen, thank you so much for that wealth of information. We like truly, it is so helpful to have a realtor be able to know the industry, know the ins and outs of things, of like making an offer and doing those negotiations to make you a homeowner. There are nearly 30,000 realtors in the state of Maryland alone. What would you recommend people can do to look for a realtor that's going to fit them best?
Okay. Well, actually, you need a realtor that is experienced. A lot of people will go ahead and they'll just go ahead and they'll just say, I found an agent. And a lot of times they don't even ask the agent, how much. time they've had in the business, or they may not ask them, how many deals have you done or completed, or they may not ask, or maybe, you know, there are certain questions that they could ask and they don't do it. A lot of times, people will just say, oh, my friend has referred this person, and I understand that they helped them get a house, and just because that person helped one person, that, your friend, it doesn't necessarily mean they can help you. So you really need to ask some questions to find out what they really know and what they're experienced in, because every agent may not have all the experience that you need for your particular situation and for the home you're trying to buy.
Awesome. Thank you. All right. I'm not seeing any more questions in the chat at this point. So with that, if you have questions for Queen, please feel free to put them in the chat. We will have time at the end of all three of our presentations this evening for all of our panelists to be able to answer. So if you think of something while Kelly is talking in a few minutes, please feel free to put it in and we'll circle back to it later. Thank you so much, Queen.
Okay,
And Kelly, take it away.
All right, I'm
thank
gonna
you.
share my screen now. I think I'm doing it right. Oh, share screen. All right, share screen. You guys see my screen?
Mhm.
Yes, we can.
Okay, I'm not the best at this either, but I'm just going to dive in. My name is Kelly Williams. I am a branch sales manager with Geneva Financial. And I work every day empowering new home buyers to get a home. So we're just going to go right through it here. Oh, I'm going to go back to the first slide, actually. If you have a camera, you want to take a shot of this page because this is my information right here. So I'm just going to go through a few of these. Why would you want to go with a direct lender? Geneva Financial is one of them. And by going with a direct lender, everything is done in-house, meaning our underwriting is done in-house, which will allow us to give a faster turnaround time. We're not brokering out to anyone. So once your contract comes through, our underwriters are working on it firsthand. They're getting all of your documentation and they're not having to rely on outside underwriters or anyone else or outside processors to go over your information. And we try to communicate with you guys clearly, you and all agents on both sides of the transaction to ensure you have a smooth closing. Um, I would say that one of the topics that comes up a lot when I'm working with first-time home buyers is a lot of them have been declined or denied by other lenders when they come to see me. Some of them have been working with banks or credit unions or maybe a recommended bank, and for whatever reason they were turned down or they're getting turned down by a builder. We happen to be able to approve 80% of all turn downs from other lenders. So if you've been denied by another bank, don't let that discourage you. Certainly reach out to me and we will take a second look at your credit profile. And in a lot of cases, we can get you approved where the other lender couldn't do it. All right. And we do that in several ways. Now, I'm not going to go through every single thing on these slides, but there are some things that definitely stand out as far as what people perceive as limitations to buying a home. You do not need 20% down on a home in order to purchase it. There are certainly ways to get it down to 3 or 3.5%, or in a lot of cases, nothing. There are financing programs out there where you don't need any money for down payment. And we can certainly look into that if you qualify for those types of programs. As far as credit, we can actually help people as low as 580 or better. For the sake of this discussion, we do want you to be at a 640 to qualify for a program that I'm going to talk about in a bit. But otherwise, if you don't qualify for that program, there are other ways that we can get you into a home as well. So don't let that discourage you. All right. And the first part of buying a home, when you talk to a lender, we're going to talk to you about your particular scenario. So that includes a credit check. We're going to look at all three bureaus and we're going to take your middle score. That's going to be your qualifying score, right? We're going to look at your income, all parts of it. So your salary, no matter how it is you're paid, whether you're self-employed, that doesn't impede you all the time from getting approved. If you're self-employed, we can talk to you about how to get improved if you're self-employed. Um, we're going to look at your W-2s, your pay stubs, things like that. Don't let it discourage you if you're on a fixed income either. We approve people who are on Social Security and disability all the time, or other fixed income, ways of being paid. So don't let that discourage you. We're going to look at all of your assets, things like that, in order to get you qualified as well. All right. And then once you are pre-approved, as Queen mentioned, you're going to go house shopping. We're going to have a pre-approval letter that we're going to send to you and your realtor. And then you can go out and you can find your home. Your realtor is going to present an offer, a contract for you to that listing agent. And then once your offer is accepted, you're going to determine a closing date. And then you're going to come back to me. Okay. And then from there, we'll look at the market and see if it's going to be in your best interest to lock your rate, whatever that rate is that day, okay? Or whatever the rate is that the Maryland Mortgage Program is offering. That's the rate that you're going to qualify for. After that, you're going to get your appraisal ordered. Turnaround time for that is sometimes a week, right? With us anyway, and sometimes sooner. And then all the other necessary requirements that go along with that until your final approval is issued. Okay. And during that time frame, when you are buying the home and going through the process of pre-approval, it is very important that you don't do anything that's going to um, kill your deal, right? So you don't want to open up any new accounts. You don't want to finance any new credit. You don't want to co-sign for anyone. I always pay attention, especially to the don'ts. Um, you sometimes you get the more do's right than, but some of these don'ts will really crush your deal. So we don't want you doing anything like that. Don't make any major purchases like don't, well, obviously don't buy a house, but don't buy a car, don't buy furniture. I have actually had people do that. Um, and it just makes it a little tougher to get the deal done. I'm not saying it can't be done because we've done it, but it's better if you don't do those things. Now, with the down payment assistance programs, I'm going to talk to you about the Maryland Mortgage Program specifically. I'm not going to go into detail about it, but as far as the criteria and things like that, but I can tell you that the Maryland Mortgage Program is the program that I recommend most frequently to first-time home buyers, and we do quite a bit of them. And I can, go over programs with you all day, but I've just found that it's best if I tell you a little bit about how that program can benefit you. So, for example, I've had a client that was actually renting a home with her family. She was on a fixed income. She was on disability. Her husband was, just had a modest income. He worked in retail, and they were just basically staying afloat, but she was on a fixed income. They tried to buy a home with another lender. And once that lender saw her credit profile, they never called her back. So that they didn't, the other lender didn't even call her back because her credit wasn't the best and they didn't make much money and they didn't have much savings. So meanwhile, her landlord was ready to put her out because he wanted to actually sell his home. So they were really in a predicament. Well, she found me and submitted an application with me, and I went over everything. And after I was done going through her credit profile and her scenario, I determined that she was a good candidate for the Maryland Mortgage Program. And she actually ended up getting approved through the Maryland Mortgage Program. And she ended up buying that same home that she was renting from that landlord. So that's just one of the many, many great stories, that I have. I had, also a teacher that she had the consistent income. She'd been teaching for quite a while, but she didn't have very many savings at all. And her credit score was not at that 640 minimum either when she first contacted me. So we structured it. We went over a credit plan with her to boost her score, to get her score where it needed to be. And I would say after about 30 days, she came back and she was able to qualify for that program. So it really can work. Um, those are just two of the many home buyers that I've been able to put into this program successfully. I can't say enough good things about it. And I use it all the time. I have some reservations right now with the Maryland Mortgage Program that I'm going to close hopefully this month. So I'm excited about it and I'm going to keep recommending this program. So once you actually go through the program, get approved, you get to the closing table and you get your keys to your home. And if you utilize the Maryland Mortgage Program, there's a really good chance that you can become a homeowner. So that is all I have for today. But if you have any questions for me, I am happy to answer them.
We do have one question that actually came
Sure.
in, Kelly. Um, so one of our attendees is asking, what if a person doesn't have 2 years of work history? And is that something that could be considered on a case-by-case basis, or what is the process there?
Well, the 2 years, it really just depends. If they can show that they've worked anywhere for the last 2 years, if they can provide W-2s, 1099, if they've been in school, we can use transcripts. It is case by case. I look at everything because sometimes I've had like parent child apply together where the child had, the adult child had transcripts because that child was in school. So they didn't have 2 years to show. So we were still able to get it done because we had the transcripts, and that child was in their profession working in with the degree that they actually got in that field. Yeah. So don't let that discourage you either. Let's look at it before we say no, for sure.
Wonderful. Um, and also, I know, Kelly, you're probably getting a lot of questions about these right now. Interest rates.
Hmm.
Uh, like there's a lot of there's people love talking about interest rates, whether they're going up, coming down, staying stable. Um,
Hmm.
is there
Hmm.
a good strategy for buyers to use when trying to consider when to buy a house with respect to interest rates?
Well, keep an eye on the market, but it's a volatile market. I would say it's better to buy the home and because you can refinance out of whatever rate it is you get at some point, especially where we live in the DMV, where values steadily increase historically, we know that the same house is probably going to cost you more next year. So, do you want to pay a little bit more in interest right now, or do you want to pay thousands of dollars more for that same house next year? Right? So it's just a matter of prioritizing what makes sense for you. But if it's just saving a $30 a month over, a rate, buy the house if you can buy it. If that's really what your goal is, I would say do whatever it is you need to do to get that house.
What's the phrase, date the rate?
Date it. Just date it.
Yeah.
I'm telling you, it's true, especially here. Really. I mean, and especially during this time in this market, it is volatile and we don't know. Like today it wasn't so bad. The other day it was terrible. It's just it really is up and down. But I will say that the Maryland Mortgage Program, their rates have been great. They've been really on par with the market and they've been better in a lot of cases. And
What a wonderful segue.
it's
Sorry.
it's fantastic. Sorry.
Yeah.
I
No, you're
love the
good.
program. I am a huge fan.
Well, with that wonderful recommendation, Kelly, thank you so much. Again, same as before. Oh, actually, okay. On the buzzer, one question came in, so we're gonna do it real quick, and then Catherine, I'm gonna pass it over to
You're
you.
fine. You're fine.
What are oh, actually, never mind. Kelly, this one's about income and savings requirements for buyers to qualify for programs. So actually, we will go ahead and pass it over to Catherine, and then Kelly, if there's
Okay.
more questions to clarify, or if you want to add something to this after the presentation, we'll bring it back up.
Fantastic. I'm here
Great.
for it.
Thank you so much. All right,
Thank
Catherine.
you.
Okay, I'm gonna share my screen. So someone else is sharing, so you got to stop sharing. Okay.
I gotcha.
Okay, cool. All right. Okay. Um, share. Okay, so First of all, I want to thank all of your participants for attending. That's a huge step. You've already in the right direction. My name is Catherine Kramer-Dale, and I'm with the State of Maryland Department of Housing, and we are the Maryland Mortgage Program. And really, I shouldn't really even have to say anything more because Kelly definitely provided testimonies. Definitely. Um, the Maryland Mortgage Program is a state of Maryland program. Now, you're not actually coming to us to apply. We have a list of lenders, and Geneva Financial is right there. So it's perfect because you're getting her information right now this evening, and you're hearing her and already had an opportunity to put a face with a name. But you would apply directly with a lender. The lender is going to make sure that you're meeting all of the required requirements for FHA, VA, USDA, and conventional loans. And then, like Kelly said, she's going to sit and think, well, you know what? Is the Maryland Mortgage Program a product that would be beneficial to my client? And right now, a lot of people have the desire to own a home. They demonstrate good credit. They demonstrate the ability to pay rent. But their greatest obstacle is they don't have enough money saved. And that's where the state of Maryland Department of Housing comes in with the gap. The Maryland Mortgage Program offers you down payment and closing cost assistance. And I'm going to tell you, and Kelly might even chime back in, but in most cases, we have borrowers that after they've received money from one of the programs that your loan officer selected, they honestly don't even have to bring their checkbook to closing.
Absolutely.
The Maryland Mortgage Program provide, right, Kelly, go for it. Go for it, Kel.
Oh no, I
It's
was just
true.
gonna amen. I was just your amen corner there. That
Okay, cool.
happens a
Amen. All right.
lot.
Right. A lot. So don't stop. Don't stop the dream. Don't hesitate. If you have, even if, like Kelly said, if you don't have good credit, get with her. She'll pull your credit. She'll see what you need to do to repair your credit that is blocking you or not allowing you to have the credit score of at least 640. Your credit score has to be at least 640 or higher. She'll help you get there. All of our lenders will. Then she's going to pick a product on our rate sheet. So I'm going to go to our website, and it's a public website. It's www.mmp, which stands for Maryland Mortgage Program, .maryland, MARYLAND.gov. And you're going to come right over here. It's actually a resource for lenders, but borrowers can come on here as well. So when you're on here, you're going to look at, like Kelly said, let's go to the rate sheets. And this rate sheet is public. Anybody can come on the website. Anybody can see our rate sheets. Anybody can see the products that we offer. It's public information. Nothing's secret squirrel. Now, here's something important. With the Maryland Mortgage Program, it used to be, and I've been here 18 years, it used to be that you had to be a first-time home buyer. Well, let me explain that to you. In order to be eligible for the Maryland Mortgage Program, you have to be a first-time homebuyer. And how do you have to be a first-time homebuyer? Well, you do, but you don't. If you are not a first-time homebuyer, you could use the Flex products. There's only 3 of them, and your lender will choose which one they think is most beneficial. But with the Flex program, you cannot be on a deed or have any interest in any property anywhere in the world. Why? Because this loan that you're doing for the home that you're interested in purchasing has to be for the purpose of your primary residence. You have to live in it. You can't use this program and turn around and rent it. So you can't own anything anywhere in the world at the time of this closing because we want to make sure that the money that you're getting to use from the Maryland Mortgage Program is for the purpose intending on buying a home that is going to be your primary residence. So we don't allow you to own anything anywhere in the world, not just Maryland, at the time of this closing. So if you are not a first-time home buyer, we have other ways, other opportunities. Let's say I own a home right now, which I do, and I'm downsizing. I'm an empty nester. I am not a first-time home buyer. I own a home right now. I know I have to sell my home, right? And then Kelly would say to me, hey, you know what? In order to be a first-time home buyer, you either A, have to have never owned, right? Or hadn't owned or had any interest in the last 3 years. Or if you're a veteran, if we have any veterans, my husband's retired military as well, 20 years active duty Air Force. But if you're a veteran, the Maryland Mortgage Program says, you know what? If you're using your first time home buyer exemption, that exemption certificate, we're going to ask for a copy of your DD 214. We have a form. It's called the Attachment V. It's a veteran exemption form for using your VA entitlement for the first time. And we would consider you a first time home buyer. Or if you are purchasing a property that shows up on this tool that we have called the mapper, and the lender, like Kelly, would pull the property up on the mapper. And if that property is showing up as a targeted area, you're a first time home buyer. So even though I own a home right now, I'm not a first time home buyer. Obviously, I own a home. I've owned it within the last 3 years. I'm not going to use it as a veteran. Okay. So the only other way that I would be considered a first time home buyer is if Kelly or our lenders put the address in our mapper. And if it comes up and says it's in a targeted area, yep, you're a first time home buyer. No, I'm not. Yes, you are, according to the Maryland Mortgage Program. So don't think that you're not able to use our product. If you're not a first time home buyer in any way, shape, or form that I just described, you can still use the Maryland Mortgage Program, but you have to stay on the Flex side. And there are three products, the Flex Direct, the Flex 6000, or the Flex 3%. The Flex Direct is the lowest rate on the side. You get no money from us. Maybe you just want the lowest rate and you got a gift, or you've got money from another city or county program, or you got money from FHLB. I'm throwing out some lingos here, but the lender's going to guide you and not only provide you options with the Maryland Mortgage Program, but they're going to roll their sleeves up and see if there's any other programs that you might be eligible for in the city or the county where you're buying. And we use the word stacking. You can use us, and you can also use any other city or county money or a gift or pulling money out of your 401 or whatever. But if you needed money, then here's the Flex 6000. The rates are a little bit higher. And basically, these are the rates for the first mortgage. And then the recorded second lien, the loan, it's a loan, is for $6,000. So you would get $6,000 from the Maryland Mortgage Program. You could use that for down payment or closing costs. You don't pay any interest on it. You don't make any payments on that 6 grand, but you have to pay that back when you sell or refi. That's $6,000, all of our down payment assistance. It's not a grant. It's not forgiven, like if you live in the house for a certain amount of time. It doesn't magically go away. You can't subordinate it. You have to pay it back when you sell or refi. Well, then the loan officer, or Kelly in this instance, would look and say, oh, well, at the same exact rate, same guidelines, same paperwork. Let's see if 3% of the total first mortgage, round down, no change, is going to give you more money than the 6,000. So that's where the loan officer is going to look and see where you're going to get the bang for the buck. But if you're on the flex side because you don't think you're a first-time home buyer and your loan officer says, well, yeah, you are, Catherine. You might own a home right now, but you're going to sell it, but you're buying in a targeted area. What are targeted areas? All of Baltimore City. Targeted areas are where the state of Maryland Department of Housing and the state of Maryland Department of Planning are zoning that area to be a targeted area because they're trying to promote homeownership, to revitalize these communities. So you'll see targeted areas in Montgomery County. You'll see them in parts of Silver Spring. You'll see them in Gaithersburg and Germantown. No targeted areas in Howard County. You'll see targeted areas, obviously, in all of Baltimore City, some in Baltimore County, some not. The lender will pull the mapper no matter where you're buying, anywhere in the state of Maryland. The lender will pull that mapper so that they know how to move forward. So if you could slide to the left-hand side of the rate sheet, then you are a first-time home buyer. Well, look at the rates. Like Kelly said, woo, they're great. The Maryland Mortgage Program offers really good rates. They're very competitive. So again, the first time Advantage Direct is just like the flex. If you don't need any money from us because you got a gift, you got other money, yada yada, go with the first time Advantage Direct. Get the lowest rate that's out there on the street. Or go with a 6,000, or go with a 3%. Or guess what? On this side, we have 4%. So you can work with the loan officer and say, yeah, I mean, I need as much money as I can get. I have very limited amount of funds saved. The 5%. This one right here, you guys, is winner, winner, chicken dinner. That first time advantage 5% loan, that's the rate for the first mortgage. Your lender will calculate your mortgage payment. The 5% is 5% of the total first mortgage. Round down, no change. That's a significant amount of money to help you move into your home. You don't pay an interest on it, no rate, no monthly payments, but yes, when you sell or refinance your house, you pay off your first mortgage, you got to pay off the down payment assistance. Then we have a product called the Home Start. This is kind of where we went back to our grassroots. If you are a borrower and your qualifying income, which again, the lender will go over with you, is a little more low to moderate, then if you meet that guideline where your qualifying income is at or below the 50% area median income, they can give you 6% of the total first mortgage, round down, no change. Money, 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 money. Yeah. And guess what? Look at the rate. The rate is lower than the 5%. Why? Because it's for somebody that has more of a low to moderate income. Then, ding, 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 we just loaded a new program in Montgomery County. The Montgomery County Employee Down Payment Assistance. You have to be meeting our guidelines. First time home buyer, not exceeding our household income, not exceeding our assets, showing you completed a home buyer education class, the DTI, and the credit score. The lender will go over all of that with you. You're applying directly with the lender. But if you are an employee of Montgomery County government, they will contact the Montgomery County government representative. They'll get this form completed to verify that you are an employee of a Montgomery County agency that qualifies for this program. And you have to meet those 6 guidelines I just went over. And guess what? Are you ready for this? Are you ready? For the Montgomery County Employee Program, you're going to get, comes with $50,000. I said it. $50,000 of down payment and closing cost. There's no interest on that. There's no monthly payments. But when you sell or refi, you pay back the first mortgage and you have to pay back the 50 grand. Montgomery County is a little more expensive to live in. So we're finding that a lot of borrowers really need additional funds. It was at a $25,000. Now it's at 50. Come on. Great. Then the last program I want to go over with you is if any of you are on this phone and watching these videos and you're saying, oh, man, I have student loan debt and it's killing me. Well, when the loan officer, Kelly, pulls your credit, she's going to look to make sure, do you have any student loan debt? Oh, okay. Well, you know what? The Maryland Mortgage Program has a product where they will give you a mortgage and an interest rate for your first mortgage. If you want down payment assistance, fine. If you don't, that's fine too. So no down payment, $6,000, or if your income is lower and moderate, which is usually the case for first-time home buyers, especially getting right out of college, right? Well, this is 6%. And guess what? We'll pay off the student loan debt. We take 15% of the total first mortgage. And it's 15%, well, it's actually 15% of the purchase price, 15% of the purchase price, up to a maximum of $20,000. So if you have student loan debt that is really high, this probably won't work for you because when you walk away from the closing table, you can't have any student loan debt. But if you've got like $18,000 or $19,000 worth of student loan debt, this is it. Because we will help you buy a house, we'll provide you down payment assistance if you need it, and guess what? We're going to pay off your student loan debt. And it's not a secured lien. That student loan debt, if you stay in the Maryland Smart Buy with us for 5 years, That student loan debt that we paid off for you, poof, poof, disappears. It's forgiven. Now, don't get me wrong, you still have your mortgage. You still got to pay back the down payment assistance. But if you stay in the product for 5 years, if you decide to sell or refinance after 5 years, you don't have to worry about that unsecured promissory note that we paid off for your student loan debt. So the website is amazing, and it is definitely a tool for all of our borrowers to utilize. But I don't want to go into too much. And again, I don't have that long to talk. You're going to want to reach out to a participating lender. And Kelly is right on this call. You're going to get her information. It's going to be sent to you. Feel free to reach out to the Maryland Mortgage Program. It's single family housing, all one word, single family housing dot DHCD at Maryland, MARYLAND.gov. Reach out to us. We'll guide you on how, if you want to find a different lender. You don't apply with us, you apply with the lenders. But you have Kelly on here, so if you're interested, she's phenomenal. She will look at every option for you. She will work with you to help you get your credit where it needs to be so you can achieve the American dream of owning your first home. Again, my name is Catherine Kramer Dale. My coworker Frank Bamunde is on here with me. We do trainings all day and every day for our lenders, as well as the Maryland Association of Realtors, because we want to make sure as a state agency that all of our partners are very well educated about the programs that we offer all of you as Maryland constituents. If you don't live in the state and you want to move to the state of Maryland, or you live in the state and you want to buy in the state of Maryland, or you want to sell your current home and you want to buy another home, think of the state of Maryland Department of Housing with the Maryland Mortgage Program. I'm not sure if anybody has any questions, but again, it's an overview of all the amazing programs that we offer. And again, if you don't have a lot of funds saved, don't stop. Work with a lender to achieve the dream. You could start a year out. So if somebody says, "Well, when should I start?" Like, I really, my goal is to own a home in, by the end of 2026. Perfect. Start now. Even if you want to start and say your goal is 2027, start now. Thank you.
Thank you so much. All right, we do have two questions that have come through. So the one that we got at the very beginning of your presentation, Catherine,
Uh-huh.
and Kelly, if you want to chime in too, what are the income and savings requirements? I know we just went over that. So those income requirements, who can they talk to?
Well, I'll start first, but okay, with the Maryland Mortgage Program, it is not for low to moderate income. So you could think, oh, I make too much money. I don't qualify. I make too much money. Don't think that. Reach out to Kelly, reach out to the lender. We have an income limit chart, and we will tell you if you qualify or you don't. Okay. It's not for somebody that's always low to moderate. You could make six figures and still qualify for this program. It's not a handout, it's a program that helps you provide down payment and closing cost assistance. Now, assets. All right, let's talk about this. If you have a lot of money, why you come to the state to borrow money? So, our asset requirements are that you cannot have more than 20% of the sales price of liquid assets. Kelly will let you know what that sales price is, the 20%, all that mathematical stuff. What that means is liquidity, your liquid assets, it's like your checking, your savings, your CDs, your stocks, your bonds, a gift. Let's say you're blessed and get a gift from your parents or grandparents. Make sure it's not more than 20%. Again, we don't count any money in your 401 or retirement, so you could have a boatload of money in there. We don't count that, just liquidity. Now, if you're going to take money out of your 401 or retirement to help purchase this house, then we'll count that as a liquid asset. So you can't have more than 20% of the sales price of liquid assets. We don't count your 401 or retirement. And the lender will go over all of that with you. So you don't need to know all of the guidelines. That's why we have the experts right here to help you, to provide you the avenue as to what program is going to be the best for you. All right, Kelly, go.
Well, you were reading my mind.
Okay.
That you nailed it, and that's exactly what I tell people. That 20% rule. It doesn't come into play a lot because most of my clients don't have 20%.
Yeah,
But
I don't have 20%.
every now and then you get
Yeah,
it.
yeah,
But no, that was absolutely perfect.
yeah. Okay, perfect.
Wonderful. All right. Student loan debt. Is it bought out from the current student loan servicer too when you go through the Maryland Smart Buy?
All right, so Kelly, you can interrupt me at any time. I won't be offended. So the lender's going to pull your credit and they're going to look to see anything on your credit report that says it's a student loan. So if Auntie lent you money for your student loan, no, Auntie is not going to show up on your credit report. It has to show a student loan on your credit report. And then again, we'll take all the student loan debt that you have that is shown on the credit report and we'll total it together and we take 15% of the sales price up to a maximum of $20,000. And when you walk away from the closing table, all of your student loan debt has to be paid off because they're not going to count any of it against you when they're qualifying you. It's not like they're going to count that debt against you. It's paid off. So if you have a lot of student loan debt, it's probably not going to work for you because if we're only paying off 15% up to the max of 20,000 and you've got like 40, 50 or 60, it's probably not going to work because you're going to have to make sure that the rest of it is paid off as well before you walk away. Kelly, any input?
Most of my clients have more than that as far as
Yeah.
student loan debt. So
Yeah.
we end up using the first time advantage products most of the time.
Yeah.
But it's a great product if they fit that scenario.
Yeah. I
Yeah,
mean,
I agree.
I will tell you the first time the Maryland Smart Buy came out when Governor Hogan initially came in office, because we found that a lot of millennials wanted to achieve
Mhm.
the American dream of owning a home. And as parents, we wanted them out of our house. Um, but it originally was scheduled to only be foreclosure properties. Then it was like, no, any property in the state of Maryland, you can do the Maryland Smart Buy. Then it was 30,000. Then it was 40,000. Are you ready for this? It went up to $50,000. Well, COVID hit. So they said, well, we're not going to get rid of the program, but we're going to reduce it right now. It's going to be down to 20,000. So it could go back up. It very well could. So let the lender, let Kelly look at it and see again, what is the best product? Yep.
Right. And you guys keep us up to date all the time. So
Yeah.
I appreciate that
Yeah.
a
Yeah.
lot.
Okay. All right. And we do train real estate agents as well. So even the real estate agents, they can kind of, gear you towards a lender, but they can also educate you about the programs that we offer as well. Yeah, we're all partners. We're all here to help you.
Wonderful. Can you combine grant programs and the Maryland Mortgage Program down payment assistance?
Yes.
Yes.
Yes, yes, yes. I have buckets. I have all these buckets in my hand. Buckets. Okay. The money you get from us is your first lien. That's your mortgage payment, right? Then this bucket is whatever program Kelly says you're eligible for that would be giving you more money to help you with your down payment assistance. That's in second lien position because you got to pay it back, right? If you get money from a city or county program or FHLB or all these amazing pathway to purchase, Montgomery County, there's money out there. If it's free money, don't leave it on the table. Bring it. Get it there. It's not a lien. So if you are eligible to find money that's out there that's free, yeah, get it. You can bring all these buckets to closing. And that's why I said to you, sometimes you come to the closing table, you don't, you walk away with money. Did you hear me? You walk away with money. If you had to put money down for your earnest money deposit, your appraisal, your inspections, you could very easily walk away. It's called paid outside of closing. So it's money you had to pay up front to get all the stuff going. If you have that much money left over, you could reduce your mortgage insurance, do a single premium, pay that out. You could walk away with POC and have money in your pocket. I mean, there's so many avenues that you can utilize. And that's why Frank and I constantly train the lenders. I come from the mortgage industry. Look at the gray hair from 1985 till now. But that's what loan officers do. That's what lenders do. We're here and we're educated. We're partners with so many different individuals out there, so many organizations, nonprofits, um, FHLB, city, county programs, state programs, federal home loan bank, federal programs. If there's money out there, if that loan officer knows their business, they're going to know where to find the money. Yep.
Yeah.
Yep. I love what I do. I've been here for 18 years. I'm telling you, it works. It works.
Phenomenal.
Yep.
And that's part of the wonderful thing about the lender resource on the Maryland Mortgage Program website is being able
Yep.
to find a lender who is able to work with Maryland Mortgage Program and finding a wonderful lender like Kelly who's
Yep.
going to know about these different programs and can help make sure that you are pulling from as many of those buckets as you can.
Yep. Yep. And like I said, you do have to use an approved Maryland Mortgage Program lender. So if your friend says, I'm going to use this real estate agent, and this real estate agent is also going to use this lender, that lender has to be approved with the Maryland Mortgage Program. And we have over 100 lenders. So maybe you bank with somebody, who knows? Maybe you have a loan with them. It could be a client that you already have a relationship with. And if not, get a new relationship.
And to clarify, they need to be specifically if you're trying to use a Maryland Mortgage
Mm-hmm.
program,
Yep.
they need to be, yes, on that list of lenders.
Yep. I do. Yeah. But if you can't find anybody, I don't know. When I first started here, we only had 34 lenders. Now we have over 100. So yeah. Yeah.
All right, we have one last question currently, and it's about to be 7:30. Do you have to pay the lenders after closing? This sounds too good to be true.
Do you have to pay the lenders? What does that question mean? I'm
Yes.
sorry.
I think it is a question getting at being able to walk away from closing with a check. And these wonderful programs that we're talking about is a little bit about closing costs and
Okay.
how
Okay.
are buyers able to come to that settlement table
Yep.
and have these things that they need to pay for, like paying for origination fees and
Yep.
other things associated with your title and actually getting your mortgage, and then you walk away with money.
Yeah. Okay. So I'll just start off and say the state of Maryland Department of Housing, when you apply for the Maryland Mortgage Program through the lender, you will never see a fee that says State of Maryland Department of Housing, Maryland Mortgage Program. We do not charge any fees. The lenders, yes, of course, there are fees, and the lender will go over them with you. And Kelly, you can take that away, but there are guidelines as to a ceiling. So it's going
Right.
to be crazy, right? Take it away,
Right.
Kelly.
Those are your closing cost
Yep.
fees. So your closing cost fees include any fees that are going to people who worked on your loan. So whether it's the originator, which would be myself, title companies, they're going to do title searches, your credit report, all of those things are part of and taxes. So there are fees, but the Maryland Mortgage Program takes a big chunk out of those fees away from the buyer. For most of the programs, you're going to be paying at least 3% to 3.5% down. The
Mhm.
Maryland Mortgage Program can pay up to 6%, depending on, how much you qualify for. And that'll knock out your whole down payment and could knock out all of your closing costs. And if you have a good realtor, sometimes that realtor can negotiate seller concessions for you too. So you still don't come to the table with anything. So that's
Right.
how those fees get paid. And that's how the Maryland Mortgage Program benefits you. It's phenomenal. It's a great
Yeah.
program. So yeah. But yeah, everybody's getting paid for work they
Yeah.
do. Yes.
Yeah.
Yep, they sure are.
Yeah.
All right. I will also, oh, Queen, did you have anything to add about that, about closing costs, and any kind of cooperative, maybe a cooperative compensation or anything else?
Oh, you're muted. We can hear you.
You're muted.
Okay.
Oh, yes. Sorry about that. But yes, I do my best to try to negotiate and get those closing costs paid, and with the help of the seller, so that it minimizes the amount that the buyer has to have come out of their pockets. And I'm really good at doing that and working with the loan officer, and working with some of the programs that so that maybe you can walk away with a check. I've had several clients do it before, and they were just ecstatic, you know.
Oh
So
yeah.
it can happen.
Mhm.
And if, sorry, I can speak. If you have more questions about things like that, MarylandHomeownership.com, we have resources, including an entire video series on our website right now and on our YouTube channel that talk about different ways of compensation for your realtor, paying your realtor, and that includes things like seller concessions, cooperative compensation. So if you have more questions about those things, we have resources available for you to review when you're ready for them. All right. With that, I see no more questions in the chat. So thank you so much for your attendance. And as a reminder, we will have another Your Home Buying Keys webinar on May 14th, same time, 6:30 to 7:30. And please share that date with anyone you think would benefit from this information and another soon-to-be home buyer in Maryland. We would love any feedback that you have about this webinar, and I am putting in the chat right now this link for a Google form. If you have anything that you really loved or really think could be improved about this webinar, we would love to hear it to help us make it better for other future home buyers in Maryland. Please be sure to check out MarylandHomeownership.com for more resources and information about homeownership. And we're wishing you all the success in your home buying journey. If you have any questions, please email us at webinar@mdrealtor.org. And thank you so much. Have a wonderful evening, everyone.
Good night, everyone.
Bye.
Thank
Good
you.
Bye.
Good
luck.
night.
Bye. Yes.